Hey guys, how are you? This is Ishai Breslauer, your host of the CRE SharkEye Show. Today we're going to talk about something very interesting. You know how passionate I am about prop tech, and this is going to be very exciting. Technology is really changing the world, and the world of real estate is changing. With us, we have Badri Malynur, and he is involved in a company. You know what? I'll let him talk about it. Badri, thank you so much for being with us. I really appreciate it.
Thank you, Ishai. It's a pleasure to be here.
It's great. It's great.
So
I'm looking forward to this conversation. You know what? Before we start, give us a 2-minute elevator pitch about what the company is about.
Sure.
Avestor. Yeah.
The name of the company is Avestor.
Yes.
And what we are trying to do is change how investors invest in real estate. And we are changing it both from an investor perspective and a sponsor perspective by introducing a new type of fund called a customizable fund, which allows investors to build custom real estate portfolios and give them all the benefits of the fund in addition to all the benefits of a syndication. That's a high level 2-minute pitch, but we can 30-second pitch, but we can
we'll definitely dig into that. And you already got me curious. Let's you know what, before we go into this and we start digging into the company, into Avestor, tell us about yourself a little bit, how you got into real estate or whatever, you know, your career was, and how did you get to this company? Let's go back in time a little bit.
Okay. Well, you know, to be very candid with you, I don't consider myself a real estate professional as such. I come more from the technology background, but I'm trying to use technology to solve some of the problems today in real estate investing. Certainly own real estate. I've invested in many syndication deals, and I own triplexes, duplexes near where I live. My background is I was an exec in a Fortune 500 company, and I've been in a couple of startups. I ran a hedge fund which involved index trading options. I've invested in, I'm a great fan of studying startups. I've invested in over 35 startups. I invest in a wide range of asset classes, including hedge funds, startups, commodities, options, stocks, bonds, crypto, etc. You know, so I love investing and I love studying different asset classes in investing. So just to recap, my background is a combination of both corporate America many years back and a couple of startups after that, and also running a hedge fund which involved index trading options. So
interesting. So you came from different type of backgrounds, but what was your first? I would let's I just want to understand. You have your first profession. Let's say your first. When you called yourself a professional.
I was a computer scientist. My master's thesis was in computer science, and it was in artificial intelligence and expert systems at the time. Now, a lot of things have changed in AI, and the last few months has been interesting to say the least, with the ChatGPT technology and the generative AI technology. That's completely changed from the time I started. But I really spent a few years in software engineering, architecture, but moved quickly into management. But my original background was, well, if you want to go back even further, my undergraduate degree was in electrical engineering. So maybe you can call me a jack of all arts. I have a bachelor's in electrical engineering, a master's in computer science, and also an MBA. So specialized in marketing. So
man of many trades, but basically it's interesting because you came more from the technology and the technical part of things.
Correct.
And then you developed that. So that gives you the advantage of understanding the ins and outs of technology, which is, I think, fantastic. Tell me something. When you got into the startup world, when was that? As from perspective of an investor or else? Well, meaning
I would say about
from a business perspective. Yeah,
10 to 15 years back. There are a couple of startups I was involved in. One is a technology training company, and the other was a SaaS platform for automating the process of recruiting. But then I also started investing in startups about 6-7 years back, both through venture funds and through other investing clubs. So I find the process of analyzing a startup's business model and just understanding their markets very fascinating. So
interesting. And the shift into real estate, when was that? Because in order to start Avestor or to start any tech company that deals with real estate, you have to understand real estate at least from the surface of it. So when did that interest came about and that,
Okay.
curiosity?
I've always been interested in real estate too. Like I said, I dabble in various asset classes. I've been
Right.
investing in real estate for 20 years now. And I did invest in various syndication deals. But the genesis for Avestor actually came from my co-founder, Sanjay Vora. He invested in dozens and dozens of syndication deals, and he was frustrated with the experience which investors have. You sometimes have to invest $50,000 to $100,000 per deal. You have to do all the due diligence for analyzing a deal, and sometimes these deals go really fast in platforms like CrowdStrike. So what we wanted to do is bring the experience of a stock brokerage kind of a platform to real estate investing. We wanted to provide that same simplicity. And so we created our own fund to invest in real estate, where investors can pick and choose deals from a wide range of asset classes. You can, in the same fund, you can do multifamily, self-storage, retail, hospitality, value-add apartments, RV, mobile home parks, student housing. And investors can pick and choose which asset class within real estate they want to get into and which geography they want to get into. And they can put as little as $5,000 per deal. And the beauty of this fund is they can also do both debt and equity. So our investors really loved the experience, and they get a single K1. And what happened after we launched our fund is other sponsors and syndicators and real estate entrepreneurs came to us and said, what you guys have done is something incredible. Why are you restricting it to only your investors? Why don't you make it a general platform where we can create our own funds? So we kind of pivoted about two years back, and we opened it for other people to create funds, which we call customizable funds. So that's the genesis of the story. So I should give due credit to my partner who really came up with the idea. I was semi-retired, just got out of another startup. And then he came up with this idea, and I thought this was $1 billion idea, and joined the company as a co-founder. So
interesting. And meaning there are other these types of systems in the market or today. And what I want to ask you is what differentiates you guys from, for example, the systems that do digitization, tokenization, using either Cadra, or other companies. Some of them are coming with blockchain. I was, almost involved in such a thing. What is differentiating you guys and makes you a technology company that does it via technology versus, the other companies, etc.?
So the kind of examples you gave, including Cadre, is really more of a marketplace. A marketplace is a small piece of what we offer. Here is the biggest difference. Let me talk about it from an investor perspective, and then we'll go and talk about it from a sponsor perspective, okay?
Yes, for sure. Go ahead.
Let's start with the investor perspective. If you go to a Cadre or a CrowdStrike, what you have to do is you have two choices. You can either invest, you can do a lot of research, look at each individual deals, you can invest in one deal at a time, or you can go to one of the blind funds. See, this is the key distinction. You either invest one, you pick your deals and then you invest one deal at a time, and that has a lot of disadvantages because there are no pre-screened deals, and then you get multiple K1s. Or you go to a blind fund where investors do not have a choice. Whatever deals the fund manager is investing in, you have to invest in. That is the state of the art in the industry today. What we have come up with is something called a customizable fund, which combines the best features of individual syndication deals and blind funds. So investors can pick and choose which deal they want and how much they want to invest, and build a diversified custom portfolio within one fund. There is only one fund, but every investor has their own custom portfolio. So that is from an investor perspective. From a sponsor perspective, what we do, when I say a sponsor, a syndicator, or a fund manager, we provide something unique in the industry. We provide a one-stop shop for creating your own customizable fund. We help you with all aspects of marketing, launching, and scaling your fund, including all the legal entity creation, the PPMs, Blue Sky filings, SEC filings, accounting. We offer free fund bookkeeping services. We help you with the fund marketing collateral. We help you build your website. And we do all the accreditation checks and any KYC or anti-money laundering checks. So think of us as your back-end partner for helping market and launch and scale your unique customizable fund, which is branded in your name. So those are the two aspects. I know that's a long-winded answer to your question.
Oh, no, this is perfect.
But I wanted to distinguish between the investors and the sponsors.
No, for me, I understand completely what you talk about. Every word I understood. I hope the listeners do too. So I'm going to break it down just a little bit.
Sure, please.
So everybody can understand. And from there, I would like to ask you a few questions, of course. The first system I would say that Badri has is a very interesting one that they do for them, basically for their investors. And that's the ability to have a K1, meaning one K1. Yeah. In order to get that, they have a supermarket of investments that are available to them, and they all come into one aspect, into one investment, so-called. And it could be different asset class, could be multifamily, hotels, hospitality, could be healthcare, could be any single thing within the commercial real estate vicinity, up to storage, etc. And it becomes a one investment for a certain amount, which we will speak about the amount, etc. The other way to do it is Badri goes to to sponsors, and he tells them, I'm going to sort of kind of white label you, right? Is that correct? And give you all the support system in order for you to be able to do that.
Exactly.
But that leads me to basically two different questions. The first question is about your system. And the question is because the regulatory issues are very vast, are really, there are a lot of problems, which thank God they're becoming better, but they're still there. And in order to do that, I know it's from the tokenization side of things, that to get things done as a marketplace or not a marketplace, it's hard enough. And yours sounds even harder because it sounds exactly like, any other brokerage, like an interactive brokers, for example, system, or any other system that gives that type of service. Okay. So I would love to hear. That's the first question. How is it possible? Regulatory issues. How do you cover that? And technology-wise, how do you bring it in and make it available?
Sure.
And then the other question is, because you spoke about two, so I asked two questions. And the other question is, for the white labeling system for other sponsors, how is that attractive to sponsors besides the fact that they can get a system that is built for them, but those sponsors, for the most part, they don't have many asset classes. If you have multifamily, you usually do, for the most part, multifamily. If you do retail, that's what you do. So, yeah, few sponsors, and it's not few, it's very, very few, and you know that. They have multiple asset classes. So how does that help them to use you guys to do that? So these are the two aspects, the two questions.
Great questions. And both are fairly complex questions. So let me unwrap the onion.
You have the microphone. The stage is all yours, Badri.
That's always good situation to be in. So let's start with the first question. We are very careful not to break new regulatory ground. So we don't want to be in the cutting edge of trying to get new regulation to the industry. Whatever we have done, we are not a broker-dealer. We are a technology platform that enables people to select deals, and we have tried to conform to the Regulation D framework, which is, I don't know if you're familiar with it. It is a framework which allows people to raise money without being registered with the SEC. So these are not our own deals. All the deals we put in our fund are people that are deals from other sponsors or syndicators, and investors can come in, and what we do is just fractionalize it within the Regulation D framework. So that's point number one. Your second question is very interesting. So you're right, a lot of the sponsors focus on one asset classes. So let me step back. We have two types of clients, okay? We have clients who are using this fund as a replacement for their syndication deals. And we have clients who are more, I don't like the term, but I'll go ahead and use it since it's used quite commonly in the industry, capital raisers for other syndicators. So what our platform allows you to do is you can do, it caters to the needs of both clients, or sometimes people are a mix. So let's start with the first client. Why would somebody who's doing their own deals use this as a replacement? It is for multiple reasons. One, you have 40 to 60% hard quantifiable dollar cost savings as opposed to doing one syndication deal at a time for four reasons. It's one PPM. You typically pay $10,000, $15,000, $20,000 for a PPM. A PPM, private memorandum, which all syndications need.
That's right.
One blue sky filing at the fund level, less accounting, less taxes, less number of LLCs. So we even have a calculator which shows that you save anywhere from 40 to 70% in hard quantifiable dollar cost savings if you do 2 or 3 deals a year, or even about 60 to 80% in time savings as opposed to doing individual syndication deals. So that's point number one. But if you go to the other side of the equation where you're capital raisers, what we do is we allow capital raisers to let them build custom portfolios for their investors, which is not possible with any other platform out there today. They can build relationships with their own sponsors who they're raising money for, or we actually negotiate on behalf of, we have 90 funds on the platform now. We expect to hit 200 funds by the end of the year. And we negotiate on behalf of this 90 funds for sponsors to come in and give preferred terms so that we go into multiple asset classes. It could be multifamily, it could be self-storage, it could be short-term rental funds. So what we allow these capital raisers to do is build custom portfolios for their investors in multiple asset classes. So it's not possible for them to do all this on their own without the help and the connections which we provide.
It sounds very, very exciting.
Long answer, so I'll let you dissect it a little more.
No, so. Yeah. It's how do you say? There's a lot to it. So I'm going back to the regulatory issue because that's a very big deal. And you said you guys are not broker dealers, so I'm assuming you are doing it together with a broker dealer. Meaning, obviously, there has to be, or there's no requirement for a broker dealer.
There is no requirement to be a broker dealer if you're a technology platform. We are not getting compensated based on how much we raise. You need to be a broker dealer. We charge a flat fund management fee. So we are not compensated based on how much we raise.
You're a technology service. I got it. Correct. I understand. So very, very interesting. So you come and you say, listen, I'm coming to help the industry. I'm not coming to piggyback on the other platforms or other brokers. I'm coming to help everybody. I'm coming to say, hey guys, I'm here to make it easier.
Exactly.
To make it easier, and that is to streamline the entire process and to make it simpler. Very interesting. I like it. Tell me something. How, meaning competitive, are you in the market? How, meaning when you're talking about a startup, I'm moving now to the discussion of the startup aspect of it. What differentiates you in terms of a startup in the market? Meaning, are there other startups that are doing the same thing? And what makes you guys special?
Actually, the customizable fund concept makes us completely unique. There is no other platform in the world which allows you to do a customizable fund. I didn't get into all the advantages of a customizable fund. I hinted at some of them. That's point number one. Point number two is our business model is incredibly sticky. So once a sponsor creates a customizable fund, unlike instead of charging a flat monthly fee, we actually charge a percentage of assets under management. So not only, so we are actually growing with our sponsors. So we are very motivated to help our sponsors grow. And so it's not only sticky, but it's there is the potential for exponential growth, because now as they grow, our assets under management grow and our fees grow.
I got it. Scalability. It's right. There's scalability to it. Very
and
good.
The last point is we are the only platform in the world which helps sponsors with all aspects of running their fund, as opposed to just saying, okay, here is a software platform. You go to legal for somebody else. You go to for accounting for somebody else. So that combined with the customizable fund makes us very unique. So
very, very cool. Tell me something. Where are you guys based?
We are based in Beaverton, which is a suburb of Portland, Oregon, in the west coast of the United States. Our entire team is there. We do have a software development arm in India. So the development team is in India, but all the support and the marketing, sales, everything is in Portland. So
how many people in the company?
We are at 20 plus, and we are very efficient in what we do. And we believe that we have a platform even with a very small team, we can scale up to a very large assets under management type of a situation. So,
and tell me something, for the sake of meaning, we know that today the market is a little bit tricky and difficult with where things are, with it shift gear, meaning VCs shift gears, and things are a little different. Where are you guys at in terms of your growth and your next round and investors, etc.?
So we did a very small seed round, and we really are self-funded. Didn't really need the seed money.
Nice.
But we did it because we wanted to reward our earlier investors who invested in our fund and our early fund managers, because they wanted to invest in the company. So we created a very small seed round. We are, so far, we are almost cash flow neutral, which is a great position to be in. And we have not used much of the seed money. But I think now we have set the foundation for rapid growth. We have started with some Facebook advertising campaigns and so on. So we are seeing a much lower cost of customer acquisition. And once we streamline that process, we are looking at raising a Series A round, maybe early next year or the end of this year. So, but the good news is we are almost cash flow neutral, and we are largely self-funded. And the only reason we did the seed round was to kind of reward our earlier customers and early fund managers. So
that's beautiful. Tell me something in terms of clients from both sides. You guys have, I'm assuming, a certain volume that allows you to have this type of cash flow. Where are you holding with this?
Yeah, we almost have 90 funds right now. And remember that once a fund is formed, the sponsor or the capital raiser brings all their deals into the fund. So as they grow, we grow. Very sticky model.
How many deals are you talking about here? I'm talking about generally estimation.
We have 25, 30 deals right now on the platform. But so some deals close, right? I mean, we have dozens of deals, but maybe 15 to 20 active deals at a time, So.
Got it. Very nice. And in terms of investors, where are you holding?
We have several hundred investors and across multiple funds. Right. And again, a lot of the funds were launched in the last 2 to 3 months, and we expect them to rapidly grow by the end of the year. So
I'll tell you something. It sounds very, very exciting and very interesting. But you know what? Since it's a tech company, it sounds like something that gets you very curious. To me, at least, I can talk about myself. Gets me very curious to see it in action, and I'm sure that everybody's listening to it. Could be very, very curious and say, "Listen, I would like to see it in action."
Okay, so you got it. Would you like me to do a quick demo?
No. So here, I'll tell you why. I mean, I'd love to, but the problem is that it's not a problem. It's a great thing, but it's also a podcast. So as much as we see it on YouTube and everybody sees us on YouTube, the people who are listening to us on the podcast medium, they cannot see it, and that will be not fair to them. Okay. But I will invite them, and that's exactly where we came now. We are getting to the end soon. and you will tell us how they can find you, etc. We'll get to that in a second.
Sure.
But beforehand, what I would like to do is, I would like to ask, who is the best fit for you guys? Meaning, in terms of the best type of clients for you, or I'd put it differently. Who would best benefit from your technology, from your services?
So
like
there are two
ideal
aspects to it.
Customer. Yeah.
If you're a passive investor who has maybe $100, $200, $300,000, but don't want to put all that in one or two syndication deals, and you want to spread and build a diversified portfolio, we have a variety of funds, including our own company-owned fund, which can help you meet your real estate objectives. Spread your money across multiple asset classes, spread your money across multiple geographies. That's one part. But our core target market is for people who are looking for a more cost-efficient way to do syndication deals, or they want to get into the capital raising business where they want to build custom diversified portfolios for their investors and make money on a per deal basis. So our target market is, if you are doing 2 or 3 syndication deals a year, and you're looking for which is not a very scalable model, because then after 5 years, you have 10, 15, 20 deals.
Right.
You're creating multiple LLCs, multiple accounting situations. If you want to hear about something which can save you 40 to 70%, you should definitely consider Avestor. Or the other kind of person is somebody who's a capital raiser who wants to build a fund. Sometimes you have friends and family who want to invest like how you do, and who you want to let their investors build a diversified portfolio. We can help you do that with all aspects of marketing, launching, and scaling your fund, including legal, accounting, and taxes. So
I think this is really fascinating. We got to the point. Tell everybody, please. You guys can see the links above and below, but Badri, please let everybody know how they can find you, etc.
I would love to talk, even if you're not interested in our product. I would love to talk to other people involved in commercial real estate. And so please do reach out to me. My name is Badri Malynur. The best way to reach out to me, you can find me in LinkedIn, or you can also send me an email. That is badri@avestorinc.com, AVESTORINC.com. And hopefully you can put that in the contact information in your link.
For sure. I can see it above and below, and definitely they'll be able to approach, and they'll be able to contact you directly. Badri, I'll tell you something. This is very fascinating, and I'd love to hear more about this company, how you guys, get to the point of scaling it, coming up, and becoming bigger and bigger, because this is a really fantastic idea. I love it. And, and this is something that is very, very exciting in the world. I don't know I'm sure you heard of, but, I'm currently based in Israel, and Israel is considered to be the startup nation.
Absolutely. Absolutely.
And we have a lot of
It's on my list of countries to visit. So one of these days, soon.
So I'll tell you, there was a conference just a few days ago, a PropTech conference, and I encourage you to come and visit this conference as well next year. But definitely, if not, I'll definitely see you probably, whether it's on the East Coast or the West Coast, in type of events of coming PropTech. And I look forward to hearing about this company really booming and becoming huge.
Thank you, Ishai. Let's stay in touch.
My pleasure. Thank you very much for being with us. If stick around, and you guys, I hope you enjoyed the show. Contact Badri for more information and learn about Avestor. You guys have a beautiful day. Take care of yourselves. Goodbye.